Awesome. So, yeah, as uh, Nick mentioned, we will be doing a two-half call as we have welcomed by the lovely team from MYSO Finance, who have some very interesting and somewhat esoteric DeFi products that are very synergistic with the rETH and rETH ecosystem. So we will have lots of fun going into a bit of a detail on what MYSO Finance offers, and then we'll transition into the second half of the call where we cover our bi-weekly update. And as Mav loves to joke, it is up only in length, and hopefully this call will not be too long as we try to cover all those topics. So I think we have enough people here to just start right into this. So, would our guests like to first introduce themselves and briefly state what MYSO Finance is?
Yes, of course. So yeah, thanks again for giving us the opportunity to join this call. Very excited to be here. Really, also super excited about the Rocket Pool community. I've already been in touch with some of really brilliant minds in the community. I really learned so much, so it's really great to be joining today. My name is Etienne. I'm the founder of MYSO Finance. We originally started as a hackathon project during the ETH Online hackathon, and basically now very recently then launched on Ethereum mainnet. And we are building what we call zero liquidation loans, and also excited to talk a little bit more about that in a bit. And currently we have kind of one of our first pool is actually focused around the Rocket tokens, specifically RPL and rETH, and yeah, very excited to be also talking about that a little bit more in depth in a bit.
Very happy to have you, Etienne. I've definitely seen some of those conversations about MYSO in the community, so can confirm that.
Yep, thanks. Maybe also handing over to Jamie, our CTO.
Hey, thanks, Etienne. Yeah, I've also had some great discussions already with a variety of Rocket Pool community members, which has just been a great community. Now going back at least a few months, we've been reaching out to, I know Valdorf back in like October, November, and some others, and really have learned a lot on our end. But yeah, as he said, just keep it brief. Yeah, my name's Jamie. I'm the CTO, so I do a lot of the coding, full stack, and joined MYSO Finance almost right at the start. So I've been working with Etienne for a year since I officially started. I talked to him right around the hackathon time, way back in October 2021, around the peak of the whole market. So yeah, we've really kind of been talking and working on this for now well over a year. And we're excited that we're able to bring it to mainnet and in particular Rocket Pool community. So thanks again, guys. You've been great.
You know, it makes sense that you guys were ETH Global Hackathon winners because the first thing I want to ask you about is that MYSO is an Oracle-free, liquidation-free leverage platform. So I would like you guys to just break down how is that possible? Because a lot of things in DeFi depend on oracles, right? And often it's cited as the weakest link in DeFi. How can you have various activities without oracle dependencies? So how does your platform work to create leverage without oracles and without liquidations?
Yes, so basically, kind of our simple idea or approach actually is centered around the zero liquidation loans we briefly mentioned before. So what does that actually mean? So what we are interested in is basically developing kind of an alternative form of a crypto loan. So zero liquidation loans, they're essentially like a crypto collateralized loan, but where the borrower doesn't face any liquidation risk. And the way this is accomplished is that, in essence, the lender side, by design, earns yield for bearing the risk that a loan could become under-collateralized and default. kind of on purpose, leaving out this whole liquidation mechanics actually also enables a new kind of payoff or a new kind of risk exposure for the lender side and corresponding yield opportunities. So basically how this works is that we have a protocol where borrowers can pledge a token as collateral, and then they can borrow another token against that. And basically at the time when the loan is taken out, it is determined or basically set in the smart contract, like what is the repayment date until which the borrower has to repay, and what is the amount that he owes to reclaim his collateral. And basically for the kind of the loan to then be settled eventually, we don't need any oracles because it's basically in the borrower's own interest to basically repay the loan as long as the collateral is actually worth more than the debt he owes. So there's kind of a natural settlement incentive, so to speak, where we don't need any external pricing information to drive that loan settlement. So in a way, it's actually very simple, but we think it's also actually very elegant in the way that we can basically leave this very kind of otherwise oftentimes also very complex oracle part out of the equation, which can be also a great enabler, how we see it, because we think, especially also for early stage projects, oftentimes one finds that oracles aren't yet readily available, or if they're available, they're not reliable. And then basically it's very hard to actually get started with creating and bootstrapping borrowing and lending markets. So we think it's actually naturally a great alternative approach to basically create lending and borrowing markets where loan settlement and kind of loan processing can happen without this kind of external pricing and information, but instead through virtue of basically inherent incentives, where in this case the borrower, as said before, basically has kind of this option-like payoff where basically he has a natural incentive to repay if the collateral is actually worth more than the debt he owes, and otherwise he basically would walk away from the loan. So this is then on the other hand side a risk that the lender by design bears. And what's interesting about that is actually also, like, from the lender's perspective, this in a sense actually allows the lender to actually do kind of an option selling strategy. So implicitly it's actually a new form or an alternative form of kind of doing option selling, which can be also seen as a yield enhancement strategy for lenders who are willing to take this kind of additional risk.
So before we jump into the payoff curves, and sort of like the calculus about repayment, let's just step back a little and so the audience properly understands why this is liquidation and oracle free. So in a traditional lending system, like say Aave, individuals would have to borrow from a pool of assets, and that pool has to be constantly aware of the value of the assets deposited and borrowed to make sure that the user isn't sort of abusing the system. This is necessary because it is a very permissionless, super open, very flexible system. However, MYSO, and I'm pronouncing that properly, right? MYSO?
Yes.
Yes. MYSO Finance takes a different approach. Instead of making it super, super flexible, it's sort of focusing on asset pairs and making a fixed market with set, essentially, variables right at the get-go. So you don't have this variable exposure dependent on the entire protocol. It's focused just on that pair, and since it's just on that pair, you don't really need to be price sensitive, since the people at the beginning are already agreeing what they value the assets at. Is that approximately right?
Absolutely. So that's perfectly summarized, and also like maybe to add on to that. So as you mentioned, kind of these pools are structured kind of on a per asset pair basis. So basically also like this first pool I mentioned earlier, the RPL rETH pool. So basically at deployment time of such a pool, we define what is the asset pair. So in this example, it's then RPL is the collateral token, and rETH is the loan token. And then this pool is kind of specifically serving this this asset pair. And this also then actually means that this pool is kind of isolated from other pools. So that's also typically a point of interest also with some of the other bigger lending protocols you mentioned, where oftentimes there's actually also some potential financial contagion risk because everything is commingled and a lot of assets are basically pooled together in one pool. And this creates also can create some kind of additional financial risk where one bad asset potentially can also endanger other unrelated loans actually.
Sweet. So that sort of separates or explains how MYSO separates itself from other lending platforms. Let's talk a little bit about the pools that MYSO offers, and let's do this historically, because I believe MYSO launched with rETH as the very first pool available. Can you run me through how MYSO has evolved in its offerings?
Yes, absolutely. So basically, we first launched with the rETH rETH pool. This was kind of the premiere for us. So this was the first pool we launched under our v1.0 version. And basically, the idea behind that was around this use case referred to as hyperstaking, which we also found very intriguing and interesting. And basically, we kind of started out with that pool where users holding rETH could basically pledge that as the collateral asset to then borrow rETH, and then basically repeat the step to kind of lever up on their rETH yield exposure while paying kind of an interest on rETH. And as long as there's like a positive interest spread differential, then it can be very interesting to basically lever up this rETH yield exposure. So that was
so that's the first pool offering. And I just want to talk a little bit about that concept of hyperstaking and why MYSO might be uniquely positioned to offer it. So rETH conventionally trades at a premium. It sort of floats around its soft peg, right? It goes up against ETH with time as staking rewards accrue to the token. However, it tends to grow faster than it should because people want it more than it's valued. But that adds a little bit of uncertainty into the collateral's value. However, MYSO Finance is Oracle free, right? So it doesn't depend on the correct or the rate at which rETH grows, as long as both parties involved are reasonably sure that rETH will be redeemable for its value at a later date. Both parties are pretty much okay to sort of accept a non-Oracle based solution. So you can get these hyperstaking solutions without this dependence on the peg holding up. Is that right?
Yes, that's exactly right. And it's also interesting to note here that basically this kind of independence from this price oracle is also then interesting when it comes to also potential very short-lived price deviations, right? So kind of that's really one point to maybe highlight here also with regards to this oracle independence is that since we don't rely on kind of a constant price feed information and basically also don't have any liquidation mechanics that would be automatically triggered as soon as a certain price threshold is reached, that's particularly then also relevant for rather short-lived DPEGs, for example, which obviously would be of great concern if you're basically hyperstaking and then basically there's a very short-lived price dip, which then ultimately in a conventional borrowing and lending setup would immediately trigger a liquidation, which even if the price then actually bounces back, then would still kind of put the hyperstaker at a kind of liquidation penalty loss.
That's right. And those liquidations also tend to trigger other liquidations and make a whole big mess, as we saw with Aave's cascading liquidations in May of this past year. However, had those been Oracle-free leveraged positions, it would have settled without any liquidation cascade. Is that correct?
That's exactly right. So basically also this kind of financial contagion risk stemming from basically liquidation mechanics in itself. That's also something where we feel actually that zero liquidation loans are kind of a complementary solution, or kind of a useful addition to the current DeFi landscape, where it can actually also at least mitigate a little bit some of these systemic risks, where actually a lot of this liquidation mechanics also kind of have some potential to cause a little bit of mass disruption when it comes to kind of these cascading liquidations that you were mentioning.
So what risks would you say that lenders and borrowers face when they're participating in the rETH wrapped ETH pool?
Right, so basically with the rETH wrapped ETH pool, there is kind of, with this first version we rolled out, there were like a few points which we then actually kind of learned that we wanted to adjust, and that's actually also why we then continued with another asset pair. But basically what we learned is that on the way we had kind of the loan terms be calculated in this very first pool version, there the point was that we had basically a little bit of lower capital efficiency, both for the borrower and lender side. So there basically was, kind of the issue for borrowers that if they actually wanted to pledge a large rETH amount, to really actually also take a large borrow amount, that there was in this very first version we had out kind of an LTV decay, which meant that basically for every additional rETH unit you would have pledged, that then actually you would have had kind of a diminishing LTV, which basically means you had kind of a lower capital efficiency. So that was kind of a little bit a problem, which we now also addressed in this newer version, the V1.1 that we released a few weeks ago. But that was basically also one kind of very practical problem that we were facing there. But the other kind of risk or issue with that pool also was a little bit this kind of one-click looping that we actually wanted to offer, but we didn't yet support. So what that means is basically if you have, like, let's say 90% LTV and you really want to trade this interest rate spread on rETH versus bare ETH, then basically you would have to continue first pledging a certain amount, borrowing wrapped ETH, swapping that to rETH, and then repeating. So you would have to repeat
Very
this
gas
very
intensive.
often. Exactly. So basically the way to go about this is that you actually implement kind of a flash borrow function where you basically can do that in one go, which makes it then a lot nicer from the user experience, and also more gas cost efficient. So those were also like kind of then actually points which then led us to actually go to push out another pool. But also maybe to come back to kind of the general risks also in terms of that trade. So the general risk is really that basically if you are leveraging long on rETH, then basically you kind of have the risk that the staking yield potentially might not materialize, and you basically have to pay a higher wrapped ETH funding fee while actually earning a lower than expected rETH staking yield, which potentially also might be caused by slashing or the like, but basically anything that would kind of potentially endanger the yield you earn as opposed to, or compared to the rate you have to pay, that would be actually the main risk from the borrower side. And then the main risk from the lender side would be a DPEG risk.
So on the borrower side, you're essentially betting that the rETH yield will outstrip the cost of borrowing ETH, right? And so if those interest rates go out of whack, say the borrow rate is higher than the actual rETH yield for whatever reason, you end up paying more. So you're not Oracle sensitive in this case, you are interest rate sensitive.
That's exactly right. So basically you kind of have the main financial risk in terms of this interest rate spreads, where you really then kind of don't or cannot know in advance also the earning yield, how that will materialize. So there's like some financial risk associated with that. So if that doesn't materialize as you expect, then the trade might not yield a profit.
And so what about on the lender side? You said the risk would be the rETH defect. So this is for people who are lending ETH out?
That's correct, exactly. So basically what could happen is that if there is a significant defect, that then basically the hyperstaker would have like collateral that has depreciated in value and is potentially below the rETH debt amount owed. And in that case, the borrower wouldn't want to repay. Being rational, he would kind of walk away from the loan. And in that case, then the lender would be left with the rETH collateral. And if there was like a prolonged price defect, then the rETH lender would be left with this rETH that then has deteriorated in value.
That makes sense. So on this side of the equation, they're not Oracle sensitive, nor are they interest rate sensitive. They are sensitive to the valuations at the time the deal is closed.
That's exactly right. Yes, exactly.
Awesome. I think we've covered a bit about the risks of the pool's functionings overall. Let's move on to the rETH RPL pool. I think this will be very interesting to the people listening in today. Can you talk a little bit about what this pool is and what are the use cases involved?
Absolutely. So that's basically the other asset pair we're also very excited about. So basically, there are actually two pools with RPL. So we have one pool which has RPL as the collateral currency and USDC as the loan currency, meaning that you can pledge RPL to borrow USDC. And then we have a second pool, which again has RPL as the collateral token and rETH as the loan token. And basically, both of those pools allow RPL holders to lever up their RPL exposure. We think that also particularly the RPL rETH pool is very interesting for RPL maxis, because essentially what you can do is kind of pledge your RPL to borrow rETH, swap the rETH to acquire RPL, and then potentially repeat, or maybe just leave it at like doing that one time. But essentially, in what that results is kind of a leverage exposure on RPL. And basically, you're kind of betting that RPL will outperform the ETH price or our ETH price, which we think can be interesting for RPL maxis.
So this focus on the RPL ETH ratio is pretty fundamental to the way Rocket Pool functions as protocol. As the rETH supply grows, by necessity, more RPL has to be bought and locked up and staked for that supply to grow. As such, there is this indirect linkage between the RPL ETH ratio and the growth of the protocol, which means a lot of people in the community tend to focus solely on the RPL ETH ratio when they're assessing the portfolio. As such, I think we absolutely have a good number of these RPL maxis that want to lever up on the RPL ETH ratio. Another point I wanted to bring up is that currently it is very limited to get RPL yield in the DeFi ecosystem. Options are essentially limited to the rETH RPL bouncer pool or staking in a node. However, the RPL rETH bouncer pool opens users up to impermanent loss risk. The node staking route requires you to also be staking ETH. In the MYSO pool, it seems that users will be able to earn yield on RPL by lending it out, which was a new form of yield that previously was not possible. Is that right?
So this is actually also like another pool we're actually also looking into. So exactly as you said, like actually also testing the use case where you can actually lend RPL out. That's also something where we actually just today pushed out a balancer proposal. So also happy to provide a little bit more details on that as well.
So currently you
And
can't
yeah,
lend out RPL. You can only borrow RPL
that's
through this pool?
exactly. So basically, you can basically pledge RPL as collateral. So you can use RPL as a collateral asset to borrow rETH or to borrow USDC against that. And this allows you to basically leverage up on your RPL side. So for example, this RPL rETH pool, we offer an LTV of around 42%. So basically what that translates into is that you can leverage up in one loop by kind of a factor 1.4. And currently also the tenor is 90 days. So it's actually also what we think somewhat interesting then also with regards to the Shanghai rollout in March. So basically if you go now to the pool, you can basically borrow until May. So right about that time window also then with the Shanghai rollout. And what's also interesting is in terms of the fee structure or interest rate structure is that actually you mainly just pay an upfront fee in RPL instead of actually having to pay then interest rates on the loaned token, in this case rETH. So all in all, we think like an interesting option where you can really then kind of trade on the outperformance of RPL versus ETH. Yeah.
Can you talk a little bit about the balancer pool? You mentioned a balancer proposal earlier, and
Yes.
I believe this RPL rETH pool is made possible in part because there's already an existing RPL rETH pool, right?
Yeah, so basically in this balancer proposal, we're kind of exactly thinking about the other way around that you also mentioned. So as we also discussed earlier, these pools, they are always structured specifically for an asset pair, and it's basically kind of you need to have like one pool where RPL is the collateral and rETH is the loan token. And if you want to turn it around, you need to do a separate pool. But this is exactly kind of what we've been working on with regards to this balancer proposal. And what this balancer proposal essentially is centered around is around this topic of increasing DEX liquidity for the RPL rETH pool on balancer, and to specifically actually also mitigate this topic of impermanent loss that you also mentioned earlier. So basically the problem that we're trying to also kind of solve is driving or adding and building up DEX liquidity in the RPL rETH balancer pool. And currently, I mean, there are also well-known solutions to go about this, like bribing systems and so on. But basically, our idea is a little bit a different approach, an alternative approach. What we are looking into is basically to allow RPL holders to lend out their RPL to rETH holders, which then basically rETH holders can use to pair it up. So to pair the RPL they borrowed together with the rETH that they hold to then provide two-sided DEX liquidity on balancer. And the idea behind this, or why this is actually interesting, is because if you basically are an rETH holder and want to provide two-sided liquidity, but you maybe don't have any RPL, or you maybe also don't want to take any RPL exposure, then you can actually use such a pool to borrow the RPL and then provide liquidity in a so-called delta neutral way. So what that means is that you then basically are immune against these the topic of impermanent loss. So typically, if you're an LP providing two-sided liquidity on a DEX, then you have exposure to both assets. So if like one asset then depreciates relative to the other, then this translates into a potential loss for you as a DEX LP. And one way to actually neutralize this is by doing the so-called delta hedging. And you can basically emulate this through a pool where you borrow one leg and basically just own the other leg, and then you provide both assets as DEX liquidity, while actually one of those assets was only borrowed, so you didn't really hold it. So in a sense, what you are basically doing is you're kind of creating a delta neutral position in that DEX liquidity pool, meaning that you basically are immune against price moves in the borrowed assets.
Right, and since this is a fixed pre-assigned a fee that you're going to be paying for those borrowed assets, you know the price swings can't screw you later on. So I think that's a pretty beautiful system, and I look forward to progress on that. I want to switch gears now quickly to some security-related topics. So I noticed that the part of the 1.1 upgrade for MYSO pools included the option for pool creators to adjust the parameters after the pool has already been deployed. Do you foresee any risks or security vulnerabilities that could arise from this? And is this somewhat of a centralization hazard?
Yes, absolutely. So that's kind of exactly also the discussions we're having in the team. So yes, with the v1.1, basically there were two improvements or changes. One is related actually to capital efficiency. So one change that we did is basically around this loan term calculation, also to basically reduce this LTV decay that I briefly mentioned earlier, which essentially then allows for kind of higher pool utilization and better borrowing terms. There was like one change, and the other is exactly that point that you mentioned right now. So basically now with the v1.1, there is a pool creator that can update loan terms, and the reasoning actually for this is very simple, that essentially we want to test out different asset pairs very efficiently, and we decided or found that basically it's during this early market validation phase, it allows us to move a lot faster if we have kind of a pool where we can then adjust loan terms. So for example, we can kind of update the LTV. So especially for an asset that is maybe a little bit more volatile, we can still test market demand while also being able to kind of adjust depending on price moves, the loan terms to still make them competitive and interesting for us, and basically then also allowing us to not having to deploy a new pool to that often. So that's actually really a change that was driven a little bit by wanting to test different asset pairs and different market hypotheses in a more efficient and faster way. Having said that, absolutely the whole kind of idea for us, or goal and mission for us, is to actually provide a very trust minimized setup. So what we basically envision, like for a V2, is essentially allowing anyone to create his own lending vault, which means that you then kind of are in control of these loan terms yourselves, and then this vault is really specifically for you. So it's actually then meant to be a vault where not necessarily other lenders would join, but it's like really then up to you to define how you want to adjust loan terms, and then it's really also your capital that you then kind of put at risk or allow to be borrowed at the terms that you set, but it would be trust minimized in the way that you don't decide the loan terms for capital that others have provided to you. So at the moment, we have, yeah.
You feel free to continue. I was going to ask a follow-up question.
Yeah, so just maybe to add to that, so one point that's, or basically how it's also structured at the moment with the v1.1, is that the lender side is closed. So at the moment, it's actually not possible.
That was about to be my next question.
Exactly. So basically, non-whitelisted addresses can currently not add to that pool. So you kind of have to be a whitelisted address. Or if you do your own pool, then you obviously as a creator can then also define like which addresses you would like to include as part of the set of lenders. So for this early market validation phase, we think it's a setup which is kind of okay in the sense that it allows us to test these different market hypotheses and different asset pairs and kind of move fast without having to coordinate with too many different lenders, where if a certain new pool shall be rolled out and we want to migrate liquidity, we don't have to coordinate with potentially thousands of lenders who we don't know. So basically for this early market phase, we think it's a setup that kind of is reasonable for what we're trying to achieve.
Hey, Ed, do you mind if I jump in one real quick?
Absolutely.
Yeah. So the other thing to keep in mind, as Etienne mentioned, is technically there is still a setup even with the version 1.1 where if you were a pool creator, you could set the fees to 0. It would be an APR based system. You could whitelist whoever you wanted to, and then you could put the pool creator to be, let's say, address 0 or some address that nobody has the keys to. So it technically would still be possible to do this, but the downside, and this is what Etienne mentioned, is if let's say rETH was to drop 20%, you've now completely lost your ability to update any of the terms. So then at that point, what was attractive 20% ago is now completely unattractive terms. So when you've got volatile pairs, what we started to notice, because our version 1.0 did have a mutable parameter, so it was completely like trustless. But we quickly realized that, especially on mainnet, if you have volatile assets, this led to a situation where you were going to have to spin up multiple pools. And this was going to be quite a problem because of liquidity fragmentation. So we do care about the trust minimization. So that's why we decided to whitelist or waitlist, because we didn't want people to have to trust us with their capital to update terms. But we did it just because of that good business. In our mind, at the stage we're at, it was a good business decision because it was just going to be so gas intensive and fragment the liquidity.
Right, I definitely understand the mentality of necessitating experimentation while we're still figuring things out. And speaking of good business sense, I think my final question for the night is, what is the status with United States users? I believe this has been something that you and your legal team have been discussing. So, any updates on that front?
Yes, so yeah, that's a great point. So yeah, we're actually discussing this also recently with our legal counsel, and still actually a little bit waiting for a more definite answer. But yeah, at the moment we're trying to figure it out and are working on it. But kind of at the moment it's still a little bit work in progress. So unfortunately, can't give any definite answer as of now.
Awesome. Well, thank you guys both for being here and answering all my questions. If anyone in the Rocket Pool community has any questions for the MYSO folks, they are very active in our Discord as well, I'm sure, in their own Discord. And this is some pretty awesome technology that they're working on. We did not get into the nuances of the payoff curves. It is a bit more technical, and I suggest you spend a bit of time considering them if you do decide to use MYSO. But once again, thank you guys both for being here. Any questions from you, Nick, or Darren? Oh, Darren's still a listener.
We better fix that up. Let me get him onto the stage. But while that's happening, no questions from me other than maybe if there's interest, it would be good to get the MYSO guys back on. I don't know if there was scope to kind of do something with one of the Friday chit chats. We can maybe talk about that afterwards. But as you kind of alluded to, Jasper, we are hitting quite a serious issue in that not only do we have more and more guests for these calls, the bi-weeklies themselves get longer and longer. And especially for Langers. It's a big 24 hours. I think there's 3 calls for him within 24 hours. Obviously, the ETH staker call earlier today. Yesterday, there was a pre-recorded session that he did, and now on this call here, still not able to speak. So we'll work on that. But yeah, I was going to go and segue into the bi-weekly side of things now, unless we have anything left to cover with MYSO at all.
Nope, that's all for me. If you guys, MYSO guys, want to hang out, feel free to, and we might get questions related. But if not, thank you guys for being here.
Sure. And if
Thanks
there
for
aren't
having
any,
us. It was a pleasure.
yeah, thanks for having us. Appreciate it.
Looks like Langers may have left to join again. Maybe that'll fix that. But what I was going to propose is maybe kind of like what we did over the last bi-weekly, we touch on some of the technical topics now, the smart node R&D, and leave, as I'm scrolling down, I realize there's still a lot to talk about integrations, governance, media, and marketing, but maybe that can be next week with Ken. Guest is still pending for that one, so if it comes to it, we can do another kind of bumper recap. But I think Langers is online, so maybe if you want to chat through those topics, then we can see how we go.
Hey, Darren, good to hear you.
Hey, sorry, excuse me. Hey, how is everyone?
Doing well. We have a jam-packed bi-weekly as our standard nowadays.
When Mav sent it to me, it was it took up all the page. Oh, actually, it's too big for Discord, so it's getting ridiculous. But yeah, it's awesome.
Let's just quickly go over some numbers. Protocol is going quite well with rETH supply mini pool count both growing approximately 6% annualized. And node operator count also still trending upwards. Again, protocol is growing fabulously. Any comments on this growth of the protocol broadly?
Yeah, that's really good numbers. Obviously,
you're breaking up a little, Darren.
Hello, can you hear me now?
Yep.
Okay, cool. So the numbers are really good. They're very good. Essentially, the node operator one is good.
Yeah, we crossed 2,000 this fortnight. That was a pretty huge milestone, and we had a good amount of Twitter buzz on that.
Yeah, well, actually, we forgot to put that in the as a standout. Yeah, obviously, 2,000. It's amazing.
Yeah, 2,000 operators in just over a year and a quarter. So, what are these node operators using? The smart node, of course. Version 1.7.3 was released with a minor update for most, but a high priority for Lighthouse. So, if you haven't already upgraded, make sure you do that. As well as that, the testnet for 1.8 was also released. This is only on Prater. Do not run it on mainnet. Additionally, unfortunately for Joe, a 1.7.4 was necessitated because of a Nethermind update. So pour one out. Shout out to Joe for making so many extra releases this run around. Part of 1.7.4 was also an updated rewards tree spec, version 4. This one is pretty cool in that it was this the one that allowed for RPL rewards to be properly portioned depending on exactly how long you were in them?
Yeah, it was the mini pool timing. Like it would count kind of per mini pool. I think is what it is.
Yeah, so essentially just more efficient and accurate rewards for RPL stakers. So great work by Joe for this past couple of weeks. that, but 1.7.5 was also had to be released due to a high priority Nimbus update. So again, just if you are running the smart node, make sure you are on the latest version. Hopefully 1.8 does not require as many updates. So I think we can move right into research and design. One of the major updates on the website was the release of the rETH DEX router, which has been going quite well. However, the team has also been working on a complete redesign and rebrand. Can you give us a little more details? Has anything developed in that area, or is that still sort of progressing along in the background?
Yeah, no, it's definitely progressing. So what we've actually done, so the scope of the change is, the goal is to prepare for Atlas, and particularly to prepare for like newcomers, I guess is probably the best way to describe it. I can kind of optimistically. So we're going to get a whole new brand of people that are being introduced to Rocket Pool, and so we need to kind of have we'll change the structure of the website slightly to kind of reflect that. The other thing is we want to make sure that our offering is very clear and that we kind of put solo staker migration quite prominently, so that's an obvious offering that we can so that we can kind of capture some of that market. So
yeah, just a quick question. Similar to how Ethereum had a launch pad, are you anticipating our website to have sort of like a solo staker migration launch pad?
That's not a bad idea, but it's more. Oh well, yes and no. So there's going to be a whole section on solo staker migration. So yes, in the sense that there's going to be a page dedicated to taking solo stakers through why they would do it, and then obviously it then passes it off to the documentation for this is how you would do it. So so there's definitely a landing page and like a conversion page, I guess is one way of saying it, for solo stakers. It gives them all the information they need to kind of make that decision and kind of push them along that way.
Perfect. Yeah, that's essentially what I was getting at with a launchpad. So glad to see that on the team's radar. And speaking of solo staker migration, we have the Atlas upgrades audits, which are underway. This is the second audit that is being undertaken, and is my understanding correct that it's nearing completion?
Yeah, this is the last week. So
final week.
Yeah, so consensus diligence have been working for so this is the third week that they've been on it, and it's been really good. They've been posting lots of questions and that sort of thing in the chat with us, and we've been kind of going back to them about reasons behind certain things and that sort of stuff. So they've been going very, very well, and so that report hopefully will be delivered kind of sometime next week. So that I'm not quite sure how quickly they can turn that around, but we'll try and get them to turn it around quite quickly. So that report will be out in the next week, and then once we've got the report, we will triage the findings. We'll go through and fix anything that needs fixing, and then we'll be ready essentially. There's obviously some parallel work that is going on in terms of like test nets and that sort of thing. So I can go into that in a minute, but that's kind of the audit process. Is that after that they'll have to do a fix check as well, and then after that we'll be able to post a report. So they're kind of the steps. But in parallel to that audit process finishing, we're also going to be doing some the new Zhejiang testnet and that sort of thing to kind of continue on with the testing.
And so Joe let it slip a few days ago now that there are two dates sort of floating around the team's heads. essentially based around what seems like how the audits go. Can you give a little bit of detail about how the decision is being made around the final upgrade day?
Bad Joe. No.
Oh, no.
No, not bad Joe at all. We've kind of discussed kind of talking the community kind of through this. So there are 2 dates. One is kind of the currently. I mean, this is all. I'll kind of preface this with all. This is all kind of the optimistic view. If we get like bugs and that sort of thing, then it's going to push it out. But so the ultimate optimistic view is that we'll kind of have it done by the end of March, kind of like the last week of March, or kind of live by the last week of March. Now, some of it is, if we end up missing that date, which we might do for a number of reasons. So there's two particular things. A, it could be that consensus diligence come back and we need a little bit more time to make the fixes. We've given ourselves kind of a bit of time to do those fixes, but if we need more time, then that might push it out a little bit. The other thing is community testing on Gorelli. So if we feel that we need to do a little bit more community testing, we might push it out as well. So there are two kind of points at which we could end up pushing out a little bit. So if we do end up pushing it out, then we've got to push it out to kind of mid-April. And the reason why there's kind of like a big jump is because of the reward periods. We want to make sure that we've got enough time to kind of, we've got enough time to upgrade the clients and everything for the reward period and test to make sure everything's okay. But we've so Fizz and the ODAO have kind of got together, and they're quite comfortable with us giving them notice and then actioning very, very quickly. So I think the end of March is okay, as long as we don't kind of something else doesn't get in the way. But that's kind of the idea at the moment.
Could the date, could a finalized Chapella date being or not what the team expected also affect the timeline, or is the team pretty ready to adapt to whatever the actual Chapella hard fork date is?
Yeah, so we're going to go with a smart node stack that that works pre and post Chapella. So we're kind of we're not relying on them. We're going to go when we're ready. But ideally, we would go before, I guess. It depends. Like, to be honest, we don't really mind whether we go before or after. In some ways, from a market perspective, it's better to go before because everything is then ready, particularly for solo stakers. From a simplicity perspective, it's a little bit easier to go after because we can go live with everything turned on. Do you know what I mean? It's a little bit easier.
Right,
but we're not going to. We don't know when they're going to launch. And so we're going to have to kind of handle both. So that's what we're going to go with is a smart node stack that handles it either way. Now, in terms of their timelines, so from my perspective, I can't see them. I can see them doing it the end of March. I can't see them doing it before then. I might be wrong,
right.
But I can't see them doing it before then. Like just when you look at the timeline, it doesn't make any sense for them to be able to do it any quicker than that.
Denver really gets in the way.
And East Denver gets in the way for us as well. It was kind of it's going to be extremely good fun, but it was a slightly bad idea. No, I think it's going to be really good. To be honest, over that East Denver time, some of the community will be at East Denver, but a lot of them won't be. So during that time is when we're going to be on Gorelli and doing a lot of the community testing. So we can have that running while we're at East Denver, and we've kind of put some time either side of it so that we can do our own smoke testing and our own kind of like community triaging and that sort of thing for that. So yeah. So
Yep.
So I think we're probably we're probably lining up to be around the same time as Chapella, but who knows? We'll have to see.
Last question around this bread digging topic. Has there been any date discussed about when the test nets will go live, or is that sort of just dependent on the audits as well?
Yeah, so that does depend on the audits. Actually, that's on the critical path. So we have to have the audits done, which they will be, and we have to have the report and have done the fixes, and be very confident that those fixes are fixed before we go to the testnet, because there's no point going to the testnet if we don't have a full the actual contracts. Like, it's okay to do minor tweaks and that sort of thing, but there's no real point going to Groily if we don't have those have the final contracts. So that's kind of our staging environment. So it's the environment that we test that out on. So yeah, so that's definitely on the critical path. Now, our current timeline says that we should be on Groily a week before ETH Denver. And so we've got like kind of that week to deploy it and do some smoke testing and that sort of thing, and kind of release it out to the community. So that's what we're aiming for. But we will kind of have to see how this fix checking stuff goes.
I appreciate all the transparency. That was a great amount of information. Thank you.
Yeah, cool, all good.
So yeah, so moving on a bit now from the timeline around Atlas, some other interesting, super interesting in my perspective from the IMC is the rETH exchange rate, and how the oracles are being constructed. Is there any status on the ZK Sync 2.0 and Polygon oracles?
Yeah, so the
exchange feeds.
So there's actually I forgot to tell Mav. So there's actually so we've already currently have one for Optimism that we push, which is what Balancer uses on Optimism. We're actually doing one for Arbitrum as well. So we're actually doing Polygon, Arbitrum, and ZK Sync.
Even though Arbitrum already has the Chainlink oracle?
Yes. So there's a story behind that, in the sense that I'm trying to think how much I can. Again, like NDAs are annoying, but I don't think there's much. So, but essentially, Chainlink are moving towards a pay model, and so we're quite mindful of that. And with those particular oracles, they're not market feeds. They're just calculated feeds. So it doesn't make sense to use. So it makes sense for us to use our own feeds for that particular purpose. Certainly for market feeds, it's worth. Like, we're not going to build a market feed. Well, I don't think we're going to build a market feed. We should probably not build a market feed. No. And so that makes sense to use them. But for this particular thing, it doesn't. So that's what we're doing with that. So we're releasing the Arbitrum one. So Arbitrum and Polygon are done. They're done. The ZK Sync one, as you can imagine, ZK Sync 2 is quite new. And so we're working with the ZK Sync team to just resolve one or two little things. And I think actually I saw some notifications that Kane's been having a chat with them. So I think we're resolving that. So that should be really exciting.
If you are listening in and you are a team that will be launching on ZK Sync 2.0, please reach out to me, Langers, or anyone on the IMC so we can talk about getting set up pretty quickly there.
Definitely, yeah, that'd be very good.
Speaking of integrations, we have quite a bit to talk about this week. Mav, did you want to save integrations for next week, or that's for this week, right?
Let's do this on the fly. What do you think, Langers? Should we spend a bit more time going through some of these points?
Yeah, we can do some integrations.
Sounds good.
It was quite a big one, wasn't it? with
It's
integrations?
huge.
Yeah, okay, cool. We can maybe we do the top couple or something.
Yeah, so some of the more important ones are Euler Finance is a major lending and borrowing platform, and they have moved rETH to Snapshot on if they should onboard. And I believe this has now passed, and this is essentially a signaling vote whereby once the Chainlink market feed oracle does go live, then Euler will onboard rETH. So this is similar to Aave, who have also posted a snapshot for the onboarding of rETH, dependent on the Chainlink Oracle integration. So it's pretty good to see, I believe, two of the largest lending markets already very happy with rETH.
Yeah, and that's, I mean, lending markets are important. They're kind of those, they're the next layer in the utility kind of pyramid. You obviously have the kind of liquidity, and then lending, and then at the top you kind of have like yield aggregators and that sort of thing that kind of go across everything. So yeah, having more kind of debt markets is definitely great for rETH.
Speaking of debt markets, we just in this call talked about MYSO Finance. So they released their RPL rETH pool. Make sure you check that one out. Shout out to them. Another major integration, or well, not so much integration, but advent from the community, is that the Rocket Pool Rescue node is now live in beta, and there is in fact a POAP for this. So the Rescue node, I think, is one of the craziest, most impactful updates or revolutions for the RPL ecosystem, in that it can really lower risk for at-home stakers. Yeah, any comments from the team about the progress of the Rescue node?
Yeah, it's amazing. I love it.
Really, yeah.
It's again, it's kind of a manifestation of the community supporting each other, and the way that because we are a staking community, everyone has kind of Ethereum's best interest at heart, but also they help out each other and to make sure that we all kind of do well. I could have done with the rescue node because my node went down, but
oh no,
I know.
Recently, or
yeah, a little while ago. Unfortunately, I've got Nimbus pre-split mode. Now I'm doing what we tell everyone not to do, and that is I'm running the split mode one. But yeah, that would have been handy. I'll definitely look into it for next time though.
You would have gotten a POAP too.
Oh no, missed the POAP.
Yeah, so big shout out to Patches on the Rescue node, and the Rescue node did in fact get funding. So big shout out to the GMC too. So another integration that is being worked on is from DApp node, and this is one that the whole community, or a variety of communities at this point, have been asking for, and that is a package so that people who have DApp nodes can natively use Rocket Pool. This has been a long time coming. There has been requests from both the Rocket Pool community and DApp node community to get this integrated. However, I believe the Rocket Pool community team has been pretty adamant about trying to work solely on the contracts and letting these other providers sort of fill in the gaps to onboard Rocket Pool onto their systems, which makes complete sense to me. So, Darren, any thoughts on DApp node finally working on the Rocket Pool integration, which I'm very happy for?
Yeah, it's fantastic because there's a spectrum of people who get into staking. There are people who can install Linux themselves and configure it and all this sort of thing. So they can buy a box, they can buy a Nuke, they can buy a Proteus or whatever, and they can just do it. Then you've got at the other end, you've got liquid stakers who don't want to do it at all. But then in the middle, you've got these people who just want a box that they can plug in and like an appliance really that they can plug in and get it working. And it's a bit more kind of UX driven UX driven and easier from the sense you don't have to do it as much kind of terminal work and that sort of thing. So there's definitely a kind of a spectrum of people, and that's what this kind of fills in. Avado is another one that does something similar as well, but so this is another kind of one of those that kind of fill that part of the spectrum for people.
I think it's important that the Rocket Pool team themselves are not working on this, because a variety of voices in the community have expressed their insistence that perhaps we shouldn't abandon a CLI, because ultimately, if you are a node operator and something goes wrong and you don't understand how to work the CLI, how your system actually functions, troubleshooting might become very difficult. And if you don't know how to troubleshoot, you could actually end up posing a risk to Ethereum itself rather than helping it. So while DeFnode is very useful for a large chunk of users, I'm glad that it is a sort of an external project. But moving on, Index Co-op is Index Coop is a very prominent protocol, and they do large basket tokens, things like the bed index for Bitcoin, Ethereum, and DeFi. They have launched what they call the Diversified Staked ETH Index. And notably, rETH is the largest constituent of this index at approximately 44%. So this token, this index, is very cool, but it's not perfect. Some of the good things it does is it lets sort of lazy stakers get access to a variety of different LSD tokens, which in some respects might decrease risk by having a diversification. However, there are a variety of reasons this is not an ideal token, at least as far as the incentive committee is concerned. Namely, that the tokens, once they're in this index, sort of just sit there. They're not being used to provide liquidity to anything, so it's not as efficient as it could be. That said, it certainly opens the door for some institution-esque investors who are looking for very simple products. So what is the team's opinion on this token?
Yeah, so I think so one of the things that they approached us on is the reason why rETH has such a big plays such a big part in the index. It was, I think they do a very amount of criteria. There's a whole set of criteria, but
yep.
one of the main ones is the kind of node to validator ratio, and we score extremely well on that, whereas a lot of our competitors don't. And so that is, because that's a kind of a key metric in terms of decentralization and kind of health for Ethereum. So that's why we score quite highly on that, and that's why they've put us in such a high spot there. Maybe this is for another call. My only thing with a basket of it is kind of the risk of it's diversification, but if Lido has a problem, the risk is still the risk is still there. So that would be my only thing with kind of basket ones.
If I can
just be mindful
quickly here. In less than 48 hours, there's going to be what could be quite an interesting panel discussion between Langers himself and then a representative from Lido and Stakewise, hosted by Index Coop. The event is in the Discord as usual, and we're looking to be able to mirror that onto one of the Rocket Pool channels, maybe a Twitter space, maybe YouTube. I'm going to be working on that later today, setting that up. The Index Coop guys have provided that functionality. So in terms of where you'll be able to watch that, stay tuned for the URL, but I'm imagining that's going to be something definitely worth joining.
Yeah, I think this token is a net positive for the space. However, totally echo all your sentiments there, Darian, that it could be better done because it doesn't really it doesn't really diversify your risk, nor does it provide too much value to the protocols. However, it is still a novel way to get access to different LSD tokens. So really looking forward to how that conversation pans out tomorrow or soon. Do we know who the representatives from the other protocols are going to be? Just curious.
I'm not too sure. I could ask them. Maybe they've tweeted it out. If so, I missed it. But
yeah. So some other integrations are another couple of lending platforms, Silo Finance, which does isolated markets, and Yield Protocol, which I'm personally not too familiar with. I'll have to do some reading on that one. But cool to see the DeFi integrations piling up. And speaking of piling up, nothing has piled up more recently than the SEX integrations. So it's sort of just been a nonstop flood since Binance had its moment. I'm just curious, from the team's perspective, are all of these sort of just happening on their own at this point?
Yeah. Yeah. And just really crazy. And I feel for Mav because he's been kind of doing
Yeah.
the sex handling. And so the Binance thing dropped, and like that was I've been speaking to them for a long time, but obviously they don't tell us when it's going to do it, so when they're going to drop. So it just happened. And so so that was kind of a surprise. But then literally the next kind of 72 hours was non-stop sex.
Yeah.
CEX. So it was very, very wild.
very wild, very tiring.
Yeah, just
and probably for context here, the previous bi-weekly had, was it maybe 3 or 4 listings? I honestly forget which was which. Most of these exchanges seem to have variations on bit something or something bit, but yeah, that rolled into the previous 2 weeks, and there's actually one final, not quite an exchange, more of like an on-ramp kind of aggregator entity that wants to support RPL, so that will be coming soon. But yeah, quite a crazy time, and it wasn't until I really listed them all out in the bi-weekly that it was kind of hit me as to how many dropped in such a short time. It really was just one after the other. I'd say maybe half of them reached out to see if we could kind of amplify the message, which we kind of can do to a very limited extent, but just coordinating with them on that. And then the others just kind of went along with the flow, I guess, caught up with the LSD mania, which is an interesting segue into yield protocol. And I'm not too familiar with them either, because they've kind of done the same thing in terms of integrating, supporting rETH first, and then asking the questions later in terms of potential collaborations there. So I guess that is one example highlighting how great DeFi can be, right, in terms of being permissionless and enabling protocols to kind of build on each other in that way. But we are now in touch. Anyone who's in the Discord 12 or so hours ago, earlier today, might have seen one of their representatives drop in and reach out. So we'll see what we can do with them in the future.
absolutely always open to new integrations in DeFi and partnerships. The IMC has money to spend if you are willing to make us an appealing offer. So definitely get in touch. I think we can now shift gears a bit into the governance, which has been an interesting place over the past couple of weeks. So 3 of the coolest RPIPs, in my opinion, have just gone live recently and are available for voting. The first one is a pretty simple one, but actually generated some great debate and modeling, which is the proposed protocol settings for Atlas. The most important being the size of the deposit pool. So the proposal is suggesting an 18,000 ETH cap from 5,000, which is a pretty substantial jump, about 13,000 ETH higher. However, due to the nature of the expected market dynamics, it is incredibly unlikely for the full deposit, for the full 18,000 ETH to sit full after Solar Staker migration and LEB 8s are live. simply because of the absurd amount of supply capacity that will be unlocked. As such, it seems pretty safe or fairly conservative to increase it to this 18K amount. One of the big benefits of a large deposit pool is that the protocol's throughput, large transaction sizes, become more accommodating. So we've seen Lido accept deposits of over 25,000 ETH in one go. And while this doesn't quite get us to that level, it gets us a hell of a lot closer. So any comments on the protocol settings?
So there was a lot of work done by Valdorf and Noshua on that stuff. So definitely give them some recommended little props for that. So yeah, that's going to be really good. I think that's kind of as long as it passes, which I'm sure it will.
Currently 100% zero.
All right, okay, excellent. That will kind of kick off a little bit before the Atlas launch date, so that we can start building up that capacity within the deposit pool ahead of Atlas launching, and people being able to migrate there. Well, yeah, and again, that might be a timing thing as well. So we have to kind of we need to figure out that timing. So we can launch it, and 8 ETH mini pools will be able to launch, but obviously migrations won't be able to until after Shanghai. So we'll kind of have to play that as we find it.
Did the community ever come to a decision around if the protocol should arb itself, so to speak, in that upgrade from 5 to 13, if there's still a premium available on the market?
Yeah, so I think it's within that proposal, actually within the discussion, there is that option, and so that's definitely a possibility. Once the proposal's kind of passed, we'll kind of figure out how we can do it. But we should be able to arb that. Depends on what the premium is at that point in time, but we will look at arbing that and giving that back to. I think it was basically to give it back to rETH holders. So that was kind of like the idea, to give it a slightly extra APR boost.
Yeah, I think that's the ideal way to do it. Sort of keep that value within the protocol, since it sort of belongs to the protocol itself.
Yeah.
So moving on to the next RPIP, which is my favorite of this bunch, it is the self-limiting rocket pool improvement proposal, which has made its way around crypto Twitter at this point. Broadly, this RPIP is stating that rocket pool should act in the best interest of Ethereum itself, and that if rocket pool growth becomes damaging to Ethereum, that rocket pool will act to limit its own growth. And while the RPIP guiding principles are fairly broad value-based statements, there is a broader discussion with some really good analysis and breakdowns about different market conditions that could be expected in the future and how the protocol ought react to them. This is a pretty pertinent debate to have early, because having a set soft cap prior to getting close to that cap, it's much easier to follow it than if you bump up against some value, and then as you bump up, try to decide that no, you are at the limit. So how does the team view this vote? The team has actually, I believe, well prior to this RPIP already stated that the 22% that Superfizz and the broader Ethereum community had been talking about is a very reasonable amount. So I'm assuming the team has only responded quite happily to this. Yeah,
I mean, it's basically, so we kind of put that announcement out that we would support a limiting, or we would put forward a proposal, and it's fantastic that the community have kind of have done this. That's the good thing about DAO. You don't necessarily need our permission for everything. So it's fantastic. So so that what it does is it kind of echoes what we thought the community would do anyway. We all have kind of shared values, and that shared value is, well, it's not just shared values, it's also just common sense.
Right,
you
it
don't,
really
you
is.
don't, it really is common sense, and it blows my mind that
Yeah,
the
yeah.
other protocols have not followed suit. I just, yeah, it blows my mind that you would destroy the thing that is creating value for the sake of growth.
I
I'm
think people
really,
have a poor understanding of risk adjusted returns in the crypto space. And so if
yeah,
you adjust your returns for market dominance, as you grow in size, if your yield stays the same, you're actually getting less yield in a risk
yeah,
adjusted sense.
yeah,
So again, I think it is common sense, but common sense is not common to the common crypto Twitter person.
yeah. And I'm glad we've done it this early, because it means that it sets the stage. Um, you know, it echoes that we all have the same shared values. It echoes that this is what we are going to do. So similar to when Vitalik said, we're going to proof of stake, or we're doing this. If you echo that early, then it makes sure that everyone kind of is on the same page. It's great.
Exactly. I think Vitalik was talking about proof of stake around when Ethereum itself was even launched, not as like a set in stone thing, but him putting the value statements out there gives guidance to the protocol development. It's clearly an important thing to do. So the last RPIP for this round of votes is a bit of a procedural one, and it is a modification of how the Grants and Bounties Management Committee is structured. It is changing reward cycles from every 2 months to 3 months to give the committee more time to live, so to speak. And it's also setting the stage for new votes as vacancies have emerged. Another thing is it is rewording the idea of non-community members, given that rocket scientists have recently been elevated to the, ODAO position. But again, broadly, this is a very procedural vote. So if you are interested in the fine workings of how the DAO works, definitely make sure to go vote and read this thoroughly. I think the most important thing to take away from this is that the GMC is a work in progress. And although we are making modifications now to it, I think we should also be willing to consider future modifications as needed. So yeah, thoughts on this, and then maybe we can jump quickly into the announcement of the grants and bounties round.
No, that's all good. All good.
Yeah, so the grant and bounties round was announced this just today, and a large sum of money was awarded to a variety of people. Some standouts include Patches for his work and support, the Rescue Node, Ken with a variety of research paper proposals, Nashua with an ODAO assessment for eventual potential elimination of the ODAO, myself for business development work in the prior year, and more. I really encourage everyone to go check out the results page and see potential future work that's coming into the space. I'm sure the team probably can't comment on award sizes or awards broadly, but I think a different question that you might be able to answer is, what would the team's wish list be seeing this round for the next round?
That is a great question. I think I think a lot of the grants that have come through are really good. I think next round, yeah, I don't know, to be honest.
Tough question.
I think what's exciting is that I don't I don't know, because it's going to be what the community kind of need and want, and so that's where it should be, to be honest. It's great that the community are driving it, and it's great that the people who are contributing value are getting kind of rewarded for that.
Yep, fully agree. It seems like a fruition of the community endeavors. Personally, if from my own wish list, I would love to see more research-oriented applications for the next round. I love what Ken and Nashua had proposed, and I would love to see more of that kind of work next swing around. So if you enjoy research in any form, data analysis, or game theory, what have you, or social coordination, we do definitely need DAO-based research as well. Think of a proposal and throw it out there.
Yeah, the two that kind of cop off the top of my head, but I think we were going to dedicate some time once kind of Atlas was out, but depending on, it all depends on lots of different things. But there are two kind of research areas that might be. So there's one outcome area, and that is kind of slashing protection. So that's one outcome area that would be good. So things like, so within that scope, there's a few solutions. There's like DVT and like secure enclaves are two things I can kind of think of. DVT, we've done some initial kind of research on. It's very hard to put into a permissionless environment, but it's worth doing a research piece on DVT and how it could be applied to Rocket Pool. There's that element, and then the other one is potentially like these secure enclaves for
SGX.
Well, it is tricky. So how I'm seeing it is with secure enclaves, you don't want to lock yourself into a particular piece of hardware. So it's almost like the secure enclave needs to be agnostic. You need to be able to use different enclaves, but it's almost like a spec, and then you can use it with different enclaves, because what you don't want is to use one type of enclave and then have that enclave be, there might be a hole in that enclave, and then suddenly Ethereum is at risk. So that's why it's almost like you need a spec. So but then you've also got then a consensus layer, execution layer, and then enclave. So there's all these permutations of different things. So I don't know, and I'm not an expert on security enclaves or anything like that. But that might be something that is worth kind of looking at as well. It's something that can be probably quite easily applied to Rocket Pool, and if we can cut out that kind of like slashing risk, we actually get rid of one of the kind of tail risk ends of everything. So yeah, that's one thing.
Yeah, that's a very interesting idea. SGX is already used to secure the Avalanche bridge, and they are theorizing in the ETH Magicians forum on how to use SGX for rollups and all sorts of things. So definitely, if you are a researcher that is keen on SGX, please look out for research on SGX Rocket Pool. So we are now brushing up against 7:30. I think those are the most important topics I wanted to hit from the bi-weekly. Final question, just to sort of throw you under the bus, Langers. What's our status on ODAO conversations? You don't have to go too in depth, just in brief terms.
Yeah, no, I was going to post back into the thread this morning. So where we're at with that is so what we've kind of not decided, but one of the how we're going to approach it is, so we're actually convening a meeting with the ODAO. So we're going to get together as a body and discuss basically the thread. So I think there were like kind of a few key issues that kind of came out of it. The first one being obviously the kind of payment reform. Then the other one is like the Constitution, which I can't remember who put that. Was that you that raised that? Which is a really great idea in terms of knowing what the relationships are between the different kind of entities and that sort of thing. And I think there was a third one, but I'll double check what that is. So that what we're going to do is convene like a meeting of the ODAO. We're going to try to step back and try and get the ODAO itself to kind of organize this, but convene kind of a meeting and kind of discuss those options, and then come back with what we've kind of said. That's just to get the ODAO's perspective on things. That's not necessarily to make decisions or anything. It's just more to get their perspective on things.
Yeah, this is definitely a topic that needs iterative steps and not sudden change. So that's great news. Very happy about that.
Yeah, and I know it's something that is kind of, I guess, like a burning issue for the community. We will try to kind of get this this kind of meeting set up, or group sets of meetings set up, pretty quickly.
Yeah, while I definitely echo it is burning, I still think the community values Atlas as the #1 priority. So don't feel too much pressure to
Cool.
stuff until that. Yeah. But yeah, that just about wraps up the call from my perspective.
Well, we better let Langers run. But yeah, still a lot of marketing points to get through. I'll try and cover them off. Well, we should have enough time to, with Ken during next week's community call. So apologies. Otherwise, we'd probably be hitting up against the 2-hour mark.
Yeah.
I don't think we've reached quite yet. But yeah, if you want to do your usual closing remarks and recap, Jasper, and yeah.
Alrighty. At the beginning of this call, we were greeted by the lovely folks, Etienne and James from MYSO Finance. We discussed their Oracle-free, liquidation-free leverage system where people can... Oopsies, 1 second, sorry. Sorry about that. But yeah, their Oracle-free, liquidation-free leverage platform where users who are RPL maxis can do fixed borrowing to leverage up their RPL holdings. For people who want to hyperstake rETH, they could do fixed rETH borrowing, fixed ETH borrowing against their rETH. This system avoids all oracles and can get some pretty exotic positions in DeFi. It is currently gated away from US members, and it is still in a rapid evolution phase, so do your own research for sure. But yeah, make sure you check out MYSO Finance. Their Discord is very active, and they're often in the Rocket Pool Discord too. So if you have questions, there is tons of resources out there. After we discussed the MYSO Finance protocol's onboarding of rETH, we then jumped into our bi-weekly update, which was expansive as always. We briefly touched on the myriad of smart nodes upgrades from 1.7.3 all the way to 1.7.5. So if you are running a smart node, make sure to check you are properly updated. In the world of R&D, we also mentioned that Rocket Pool hit 2,000 node operators. Huge shout out there. In terms of R&D, we talked about the Atlas timeline, about how the audits are going to be wrapping up this week, and hopefully they'll report next week, which means that the team, if all things go well, approximately would be able to then start their testnet in February somewhere in February with a eventual actual mainnet date end of March, early April. Again, that is approximated. Additionally, the rETH exchange rate has been near finished for Arbitrum, Optimism, and Polygon, and work is nearing completion for ZK Sync 2.0. The integration side of things has been incredibly up only, with Euler Finance and Aave both in the snapshot phase of onboarding rETH. Beefy Finance and MYSO and Yield and Silo all being prominent DeFi integrations that happened. Most of those are lending markets. MYSO Finance, as we mentioned at the beginning of the call, also has done a variety of products. Importantly, the Rocket Pool Rescue node is now in a live beta, including POAP. So if you want to contribute to the ecosystem, definitely give that a swirl. DApp node also is now releasing a package for Rocket Pool and mini pools, something the community has long been asking for. Sex Mania also hit a crescendo these past 2 weeks, as essentially every centralized exchange onboarded RPL. In governance world, 3 important RPIPs are now being voted on. The first for Atlas protocol settings, the second for self-limiting principles, and the third about the GMC sort of technicalities. Definitely make sure you go and vote. There's also been a substantial amount of ODAO conversation that you can find in the Discord. But that just about summarizes the call for today. Thank you all for listening, and we will see you soon. Do you want to give us a quick rundown of our next set of calls, Mav?
That's probably a good idea. So we have the Index Coop liquid staking webinar in just under 48 hours time. I won't attempt to read out dates and times, but to get them automatically updated to your time zone, you can check out the events section in Discord for an easy reference there. Then we are working on a special guest. Could be quite a large household name, at least in the world of DeFi, for next week. That's still pending. Then the following community call, which I believe will be, well, not far away from ETH Denver. We also have a special guest that's now going to kind of mid-Feb arrange for that. So both of these next calls will have more details shortly, and they'll be updated in Discord accordingly. There have also been one or two other calls that Langers has participated in, which have been pre-recorded, and they will be released again. I think we have one within a week or two, and then another probably towards the end of Feb that's scheduled. But yeah, please keep an eye on that event section. It is the easiest way to stay up to date with all the call opportunities that you can join. And as usual, at least when we are hosting the calls, there will be recordings available afterwards as soon as possible on the YouTube channel.
Sweet. Thank you all again for tuning in. Take care.
Thanks everyone. Thanks, Jasper. Cheers.
See ya.